Let's talk about why CEOs often end up paying lower taxes than their assistants. On the left, I'm showing CEO Jane. She's the CEO. She makes $5 million a year. On the right side, we have her assistant. He's making $70,000 a year. But Jane ends up paying taxes at about a 20% rate, and her assistant is paying taxes at 37%. The difference is something called source of income. Jane gets most of her income from things like stock options and stock sales, and so she pays something called capital gains tax, which in the United States is generally around 20%. On the other hand, John earns most of his salary through W-2 wages. And W-2 wages in the United States are taxed at a much higher rate by the federal government, somewhere in the 35 or higher percent range. So because of this difference between the source of their income, between W-2 in the case of her assistant and capital gains in the case of the CEO ends up paying a much lower tax rate. What this shows is that every one of us can give some more thought to sourcing our income from lower tax assets like capital gains and thereby benefit from lower taxes as well ourselves.